Ladies and gentlemen, welcome to Wealth Down with me, your host, Noble BM, bringing you maybe a shorter episode today because today is my birthday and I have a lot of stuff to do. So sorry for the shorter episode. I'm going to also rush through a couple of things, but really interesting week last week. We are going to talk about Intel. Stock price rose like a crazy mother lover. Also, CVS had a major jump. Hims and Hers after they had their Super Bowl commercial. Let's just see. We're going to take a look at the week, how the week performed, because our estimation was, let's just go here to on our website, the last blog post, we had an estimation of a 55% risk in the market. We're also going to do a risk assessment at the end of the episode. And of course, as always, we're going to do our trades, what we traded, what we bought, what we sold, why I did it. Let's get started with talking about the last week with the market still from the February 10th till the 14th of February. This was Friday when the market closed. It had a still range-bound week. It just cannot go above this 60,000 something. You can see here that since this 18th of December, where we had our major pullback, actually our last one was 6th of December. That was the peak. And since then, we are range-bound here. Now, the market is trying to have lower lows, but still it's capped for the upside. Now, could this signify a drop? Maybe in April? I don't know. But surely the market does not manage to break out of this range-bound movement here. So we started the week on green, then green candle on Tuesday, then... And also, let's go over the economic events. So we had on Monday nothing, then we had on Tuesday Fed Chair Powell's speech, then we had on Wednesday core inflation, it came in harder than expected. Then Fed Chair Powell also gave a speech once more. So he had two congressional hearings. Then we had PPI, which came in worse than expected, and also retail sales. That was the sell-off on Friday. Although I still want to say that it's kind of, people are still on wait and see stance. So let's see how the week rolls out the next week. And now let's go to some major news, because Intel's stock price just surged. Now, I kind of grabbed three major points. First of all, government support for domestic semiconductor manufacturing, rumors of a potential joint venture with TSMC, and also progress in Intel's turnaround effort. Well, so they're still looking for a CEO, but let's just go over a bit of Intel's stock price, which has significantly increased this week with a nearly over 10% jump actually in a single day. And let's just take a look at here at Intel stock price. Actually, I'm going to go to my portfolio and search for Intel. And you know, I was down major on Intel, over 30%. Now I'm down only 18%. I still believe in Intel. So just take a look at Intel. This is its performance still since 1 year ago. January was its peak. This January the December, was it December? Yeah, December 2023. Then on January, it started on 19th of January. It had its downfall, and since then, it lost half, over 50%. Now, the surge of the stock price and the trading volume has caught the attention of investors, especially me. The rising questions about whether this is sustainable, of course, are justified, because if you take a look at this history, Intel did not do well over the last couple of years, actually. So what happened with Intel? First of all, the US Vice President J.D. Vance has publicly advocated for onshoring semiconductor manufacturing, particularly for advanced chips, which are crucial for the AI and national security. Now, this has led to speculations that the government may take actions to incentivize domestic productions, which could significantly benefit Intel. Now onto the TSMC rumors, which are still unconfirmed, but the rumor says that a potential joint venture between Taiwan Semiconductor Manufacturing has further fueled Intel's stock price. Now, this partnership could provide Intel with access to TSM's advanced manufacturing technology and expertise, because they could send over a couple of engineers, which would then help with Intel's processing. Okay, and the last one was that Intel has been undergoing a significant strategic shift under its IDM 2.0 strategy to regain its manufacturing leadership. Now, they are without a CEO, so the recent stock rally can be seen as a market reaction to perceived progress and not actual progress. However, it is important to note that Intel still faces significant challenges, including intense competition, financial pressures, and execution risk in its turnaround effort. Now, while the recent stock surge is encouraging, especially for me, I don't want to hold Intel at least. I'm massively over the buying price. Now, not this buying price because I bought it at 27, but I'm actually looking for a target of over 50. Now, there are a couple of additional factors that we should take into consideration which contribute to Intel stock price rise. So there are actually three: the analyst ratings and price targets. Because if you take a look at Intel's price target, they are forecasting, at least until now, a minus 6.66. So 666, oh my God. Price decline, so massively underperform the S&P this year. Now, this is from its current price rise. So if the price goes down, which I do expect, especially at the next earnings report, the price may go down even further. So Intel is a 2006, 2007, 2006 is extremely dangerous for me. Maybe even 2008, where I'm going to see a massive jump in the Intel price. Also a maybe over 60, 70-ish price for Intel. Okay, let's jump to the next topic, which is Hims and Hers. Also got to actually disclose now that Hims and Hers is actually the single trade that I did this week. So not buying and selling, but bought it and sold it completely. We have 0.9 shares. So Hims and Hers, pharmaceutical health company, it has had significant rise that last week with a surge of 27% in a single day. And it has increased over 27-ish, almost 30% over the past week. Now, this improved performance has attracted considerable attention from investors, also for me, which I bought it 2 times the last week. But that's the thing with trading, because I also was talking to a friend this week, and you see this buying price, 52. Actually, first time as I bought Hims and Hers, and you could go back and watch the videos, it was at 25. So if I would have held Hims and Hers, I would have had a 100% gain, over 100% gain yesterday when I sold it completely. Made over 10%, something like that. It was also, yeah, I can say it right here. It was a 5,000 euro trade and made a good little profit minus taxes, of course. So here are a couple of key features: strong financial performance, expansion in new markets and services, and positive analyst ratings and price targets. Also increased investor interest in trading volume and overall market sentiment. Now, Novo Nordisk came out after they had their Super Bowl commercial and said that they're lying, something like that, allegedly. So let's talk about those points. So Hims and Hers has demonstrated robust financial results, exceeding revenue expectations and showing significant growth in key metrics like subscriber numbers. And that's interesting because the key feature here at Hims and Hers is that they're subscriber based. So the more they know about you, the better they can tune the products. So they have increased in the subscription number. So this strong performance has installed confidence in investors regarding the company's future prospects. Hims and Hers has been actively expanding its offerings, venturing into new markets and introducing new services. This diversification has broadened, of course, the company's revenue stream and attracted a wider, like me, consumer base, contributing to the stock price increase. I just contributed to the stock price increase by buying it, and then by selling it, I don't know if I contributed anything because the shares that I bought are nothing in the greater scheme of things. Several analysts have raised their price target for Hims and Hers stocks, indicating their positive outlook on the company's future performance. So it's kind of a herd mentality here, because let's just go to Hims and Hers stock price. So take a look at this. Take a look at this. Is this stock overbought or what? I would say so. Could it go even higher? Of course it could. How high is the probability? So this is the Friday candle which just went up and it went down. I believe that I was actually planning on selling it yesterday because they have on the 26th of February, they have their financial results. They have no dividend. Of course they have. Yeah, so it's not next week, but the week after that. So the 24th is Monday, 26th is then Wednesday or something like that. So that's when they have their financial release. Definitely check that one out. I'm also going to come back on and make a video on that. Also, the overall market sentiment is extremely important for these stocks because while specific factors related to the hims and hers have played a crucial role, the overall positive sentiment in the market, particularly towards growth stocks, may have also contributed to the stock price increase. So herd mentality. It has maybe nothing to do with the underlying fundamentals of the company. It just, hey, it's going up, let's buy it. That is why I only made a trade. And I made 2 trades. I bought it, sold it, and then I thought to myself, let's go with the herd. Let's just go with the herd, and it paid out. Now, also, when we're going to come to our sales, I'm going to talk about what didn't pay out for me. So much about trading. Okay, now let's go to the last one, which is CVS. CVS is a long time holding for me, a major player in the health, actually pharmaceutical industry. They sell pharmaceuticals and healthcare services. So CVS has had here exactly like Intel. So I'm kind of against the herd investor. Here's CVS in 2022. Here's CVS now. I bought CVS here. That is why my buying price is at 60 euros a share, and only now I'm up 3.9%. And I do believe that CVS is a great company with incredible fundamentals, has cash flow, also has a really good dividend right now. They're constantly growing the dividend now. 72% dividend payout ratio is a tinge too much. I'm going to show you another one that is a lot over that. Now, currently it's down to 4.01%, but I also locked in a previous yield of 5%, and I got actually also going to pay out. So the last dividend payout was almost 150 euros that I have already received on the 3rd of February. So why did CVS grow? There are a couple of factors. First of all, strong financial performance. They had their financial results, so earnings call, and it was just out of the gates, exceptional. Also, positive outlook for the entire year of 2025, progress in turnaround effects and analyst ratings. As always, overall market sentiment also always plays a role when you see stuff like this. When everything goes up, don't forget what Buffett says, when the tides retreat is where you're going to see who swims naked. Nevertheless, I still believe CVS is a great stock to own. Not financial advice, as always. Do your own research before buying stocks. I never do financial advice on this channel. Actually, don't do financial advice anywhere. And also, take care. I saw in the comments that people are trying to sell things. Me personally, I will never try to sell you anything. Maybe when my web application here, my Wealthdown application will be done, I'm going to offer it for the public, but that's way out there. So I'm going to offer you value, not ask you for money to invest in something. It's not an investment, it's more an investment in your own education. So let's go back to CVS. So CVS Health reported strong 4th quarter earnings that exceeded analyst expectations. The company revenue increased by 4.2% year over year, which is a lot. Okay, so this is not Nvidia. And its adjusted earnings per share also beat estimations. Now, this strong financial performance has installed confidence, of course, in investors regarding the company's future prospects. It was not good until now. Also, CVS Health provides a positive outlook for 2025, projecting adjusted earnings per share to be between $5.75 a share and $6 a share, which is massive. Now, this guidance was in line with analyst expectations and suggests that the company expects to continue its strong financial performance in the coming years. Also, CVS has been undergoing significant transformation under the new CEO, David Joyner. The company focuses on improving its healthcare benefits segment and navigating industry-wide challenges. The recent stock price surge can be seen as a market reaction to the perceived progress in their turnaround efforts. Now, analysts also forecast that the company is going to grow, and of course, while specific factors related to CVS health price increase, do not forget sentiment, because sentiment plays a huge role. With this being said, I still believe CVS is a great company. It's going to have, I'm waiting for two come arounds. One is Intel, the other one is CVS, which seems is coming. Then I also have Novo Nordisk. It has had such a huge sell-off. We're going to come to Novo Nordisk later on. Okay, so let's take a look also at the heat map. This is how it closed last week, with Nvidia being some sort of a winner here, but not quite. So let's go to trades, which I did a couple of last week, bunch of trades actually. So let's go to trades. Let's start with what I closed, what I reduced. I reduced something, yes, of course. Vernova reduced it just before it fell majorly, because it was at plus 30%. I was at plus 30%, and now I'm down to 9.14%. I reduced actually CE Vernova, constantly say Vernova. Vernova would have been a much better name. They have to rename it. So GE Vernova, which is a spin-off from GE. They have GE Aerospaces and GE Vernova and GE Healthcare, if you want to check them out. I'm a major believer in the stock, but do not want to go over 2%. Holdings, I was at 3.47% in my portfolio. Now, currently, I reduced it to 1.99%. GE Vernova yields a 2.023% yearly. And if you're betting on AI, then this is a major player. It didn't have nothing to do with AI, but it do have everything to do with grid services. So GE Vernova, that's what I reduced. That's all. Now, closed. Let's go to which positions did I close? Actually, a lot. I closed Constellation Energy. Why? Well, because it was a trade for me. Don't believe in Constellation Energy, although let's just take a look at this major jump. I much rather would believe in GE Vernova, although they have now the contract with Microsoft. I don't think they're going to grow much more from this point. Not financial advice, my personal opinion. If you have another opinion, please leave it in the comment section below. I would love to hear your thesis on GE Vernova. Also, Palo Alto Networks actually reduced it because it is getting here massively oversold. I closed my position actually due to the fact that it was a small position, and if take a look at this last candle, if it's going to have a major pullback, then I will add back to Palo Alto Networks. This is a great company, does have a good revenue stream here, doesn't have a dividend yield, but who cares? And let's move on to the third position that I closed, which is ORCL. Why? Well, let's just say let them first of all clear this major cloud or a storage necessity. How much computing or storage power will we need? I'm going to wait for Nvidia's report, and we're going to take another look at ORCL after that. Also closed Taget. Taget, pretty good company, massively down, maybe even will have a turnaround, but for now Taget has triggered here a massive sell signal over the entire week. I sold it pretty early on, didn't make that much of a visit for 9%, and then I closed it, but also got the dividend because they had the ex-dividend date on here as payout. That's ex-date on the 12th of February, and right after that I closed my position in Taget. Will I revisit Taget if it's oversold? Of course. Good company. It has a really good dividend, but I'm not going to buy it for the dividend or for the underlying value, because the market is always right, and the market now says that Taget is not the stock to buy. So I'm going to go with the market. And last but not least, Nvidia. Why? Well, Nvidia has had its problems. Although it was here on an uptrend, actually sold it on a loss. I lost around 200 or something euros, but hey, then got some money back on my hims and hers trade, which are not going to close. Nvidia, once again, maybe at their earnings report they're going to say Nvidia is the best stock in the world, buy, and Jason Wang is going to surprise the market, but I do not think so. And here's my thesis. Two factors. One, he has to explain what is up with DeepSeek. Is this a a good thing or a bad thing for them? I know how he's going to explain this. Second thing, due to the tariffs, there are going to be applied, not going to be applied, how much tariffs they are going to be applied. I think that a lot of purchases were already poured in. They were pulled forward. Now they're out, so they're going to release exceptionally good results, but the forecast, that's going to be interesting. The forecast of Nvidia. Nvidia is going to report their earnings, which is here, in 11 days. So that means, let me just check, on the 26th of February. So not next week, but the week after that. That is on Wednesday after the closing bell. But let's see. Let's see what's up with Nvidia. I do predict a major pullback for Nvidia, which is going to pull back the market, which is going to then maybe give us some buying opportunity. That's my 2 cents on Nvidia, because it's a great company and we are going to need their chips. Okay, now let's go to which positions I added to. Of course, I increased my cash position to 9.5% of my portfolio. Then I bought more Procter Gamble, that is yesterday, on this huge pullback here. Also decreasing my buying price to decreased around €2 per share. I'm currently at 6.42% on my portfolio. On a major uptick here, I'm going to reduce it to 5% of my portfolio. Also added once more to Google, to Apple A shares, increasing it to 5.06% on my portfolio. Then I added to Novo Nordisk, increasing it to 3.94% on my portfolio. Though Novo Nordisk, it does not have a good year, let's just say about that. But this could be a buying opportunity. I'm going to do a much larger video on Novo Nordisk. And Brookfield, after they had their earnings report, I added to Brookfield. Brookfield is trying to trigger here buy signals, so maybe I'm going to add even more. But let's see what the next week holds for us. Okay, new positions. I opened a new position in Tesla, currently at 6.22% on my portfolio, up 3.49%. But this is a trade for me. I'm going to be right here, extremely honest with you. Tesla is not a company that I'm looking forward to hold. You see, it's a major selling spree here. Now I'm awaiting a bit of a turnaround, and I'm going to sell Tesla. Tesla, if you took a look at the latest earnings report, they don't sell cars. I don't know what the heck is up with this company. Now, although Musk says that this is a technology company, now then sell please technology, because you're currently selling cars. So BYD is kicking Tesla's ass. And when they're going to release robots or autonomous driving, they are going to revisit Tesla share. But for now, this is a good opportunity for me to do a little bit of trading with Tesla. And last but not least, I opened a position in Realty Income. Now this is a REIT. So basically, what they do is they don't grow here. Let me scale this. So REITs do not grow, but they massively release dividends. So currently, they are at 5.7 with a payout ratio of 200. Let's just call it 300. So massive, but this is what they do. They always have their dividends. So I basically bought it for the dividend. Also, it's paying out their dividend each month. At the start of the month, they have their ex-dividend date. So the next one, let's say ex-dividend 3rd of February, and the next one will be somewhere in March, the beginning of March. Also, they're trying to trigger here they had a sell signal, now they're triggering a buy signal. I'm not even agitated about them. It's a 1.87% of my portfolio, and I don't want this to go much about 2% now. What does this mean? So if this doubles, triples, I'm going to sell it, because then the dividend is going to go down. Okay, now let's do a really quick risk assessment, and then we're done. So let's go to what is up with next week. Let's see here. Next week, we're going to have economic events. Monday, nothing. Tuesday, nothing. Wednesday, we have building permits, housing starts, and FOMC minutes. So no major news there. And then we have on Friday, existing home sales. So no major economic events happening here. Events. So we're going to say that this is a medium, low. Let's categorize it as low risk in the market. Now, the S&P is on a buy signal once more, although the S&P barely closed negative. So though it's range bound, so this is so interesting. So MACD buy signal triggered, which I would say is medium risk. Then did I misspell here triggered? No. Yes, I did. It's triggered. Okay. The RSI is at 57, which I'll just say it's a medium risk also. The S&P 500 is range bound. For whatever reason, we are waiting something. I don't know what the market is waiting for. So I'll leave it at medium risk. Now we have also next week's earnings report. We have, let's see here on, we open up also earnings hub. See the next week we have Baidu, Occidental Petroleum, Wix reports earnings. Ooh, Wix is interesting. Let's see, HSBC, not Waymo. Waymo is interesting. And Carvana is reporting earnings. Man, I made a lot of money with Carvana. Walmart reporting earnings. Cameco, which is a Canadian uranium company. Alibaba reporting earnings. Coca-Cola reporting earnings, although we already know that they have good results. And Mali, Mercado Libre, the symbol Mali, reporting earnings. So no major indices. The week after this, I said this is going to be bombastic here. And then we're going to close up earnings. So one last thing that I want to add to this is buybacks are opened, which is a low risk, opened in the market. So 40% risk in the market is my assessment. With this being said, stay safe out there. Let me hear your opinion. I'm Nova PM, bringing you, hopefully, the best economic news out there. Catch you next time. Bye-bye, bye-bye.